and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. China increases tariffs on U.S. goods to 125%. Beijing says it will ignore any further tariff increases by the U.S. government. Xi Jinping says there are no winners in a trade war, and China is not afraid as he plans to visit Vietnam, Malaysia and Cambodia to strengthen trade ties. The sell-off resumes across global markets as the trade war escalates. European markets trade with sharp cuts. Wall Street futures point to a weak open. Stocks tumble across Japan and South Korea. But China and Hong Kong buck the trend thanks to domestic buying. The Sensex and the Nifty gained 2% as stocks react to the U.S. pausing the 26% reciprocal tariffs on India by 90 days after a trading holiday yesterday. Both markets end the week in the red as tariff tensions keep investors on the edge.
पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते.
Commerce Minister Piyush Goyal says India will not rush into free trade agreements and refuses to put a timeline. Adds India will not negotiate with a gun to its head. New Delhi is actively engaged in trade talks with the US, European Union and the UK. India is unlikely to offer any unilateral concessions to the U.S. auto industry, say government sources. Officials are considering substantially lower tariffs on imported cars, which cost more than 40 lakh rupees. No final decision yet. Gold prices hit a record high again as investors rush towards safe haven assets. Oil prices fall over demand concerns. TCS sees some minor ramp downs and delays in decision-making by clients, but no major project cancellations so far due to Trump's tariffs. CEO Krithivasan says clients are in a wait-and-watch mode and there is no panic yet. Apple airlifts more than 1.5 million iPhones from India as it looks to avoid the U.S. tariffs. Amazon CEO Andy Jassy expects sellers to pass on the increased tariff cost to customers. Hajmola candy under GST enforcement agencies lens. The DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Well, the top story this evening, the world's two largest economies are raising the stakes in an all-out trade war. Now, remember, just a day after the U.S. clarified that its tariffs on Chinese goods now stand at 145%, China hitting back. Beijing has now raised the tariff on U.S. goods to 125%. In a statement issued by the Chinese Commerce Ministry, China says it will not react to any further tariff increases by the U.S. Beijing said, and I quote, "Even if the U.S. continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy," end of quote. The statement went on to say, and I quote again, "With tariff rates at the current levels, there is no longer a market for U.S. goods imported into China," end of quote. China's President Xi Jinping welcomed Spain's Prime Minister Pedro Sanchez to Beijing and held bilateral talks. Speaking after the meeting, Jinping said there are no winners in a trade war and China is not afraid, in what was his first reaction to the U.S. tariffs. He's also called for closer trade relations between China and the EU. Jinping will visit neighboring Vietnam, Malaysia and Cambodia later this month to boost trade ties. All these nations have been hit with higher tariffs by the Trump administration. Now, the man who started the tariff war remains unfazed. U.S. President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Take a look.
What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. All we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries.
China has decided to up the ante, raising the additional tariff to match President Trump's 145% tariff. So it's raising this additional tariff on all American goods that come here from 84% to 125%. Again, this would cover all American goods, and it would start on April 12th. Now, the other interesting part of this announcement is this sentence. Given that at the current tariff level, there's no market acceptance of U.S. imports, if the U.S. continues to impose tariffs on Chinese exports, China will ignore it. In other words, they're saying that they don't believe that Chinese people will actually buy American goods because they would be so expensive with these additional tariffs. So they said that if President Trump does continue to impose tariffs, then China is just going to ignore that. In fact, the Commerce Ministry also echoed that that, saying today that China will ignore President Trump's, quote, numbers game. Now, while all of this is going on, China's President Xi Jinping has been courting all different sorts of countries. Today, he met with the Spanish Prime Minister, and he actually invited the EU through the Spanish Prime Minister to help China resist what he described as a unilateral bullying. In addition to that, we've been hearing more reports that the EU is going to be sending leaders here to plan a summit with Beijing, potentially in July. Now, in addition to that, President Xi is also looking towards Southeast Asia. In fact, the government here announced that President Xi is going to visit Cambodia, Malaysia, as well as Vietnam.
Eunice, many thanks for joining us. Important to point out, as Eunice was saying, that China trying to re-engage with the rest of the world. Remember, as the U.S. imposes tariffs not just on foes like China, but on friends, on its allies, there is a vacuum that's been created there in terms of global leadership, and China certainly hoping that it can move in and take some control. Stock markets resuming their sell-off today after temporarily cheering President Trump's 90-day pause on reciprocal tariffs on all nations except for China. Now, U.S. futures are pointing to another weak opening on Wall Street. It's been very, very volatile. European markets turned sharply lower after China retaliated with 125% tariffs on the U.S. Asian markets also saw a sell-off following yesterday's relief rally. But stocks in China and Hong Kong ended in the green, and that was thanks to domestic buying. Back home, the Sensex and the Nifty gained nearly 2% in trade as the Wall Street reacted to President Trump's 90-day pause on reciprocal tariffs after a trading holiday. Remember, we were not trading yesterday on account of Mahavir Jayanti. The U.S. has paused the 26% reciprocal tariffs, but the 10% increase in the baseline tariff remains in place. That's the Sensex, 1,300 point higher. Nifty up by about 429 points, and the bank Nifty and the mid-caps also saw a jump of between 900 and 700 points. But for the week, both the Sensex and the Nifty ending with minor losses as tariff tensions continue to keep investors on the edge. The Nifty Bank Index has lost 1% this week despite Friday's rally. Well, it has been a wild ride for markets across the world this week, and it's not just stocks. Commodities, bonds and forex market have also seen intense volatility. Prashant joins us now to wrap up the week that was for global markets. Prashant, what a week, but we're clearly nowhere close to being done yet.
Well, it's been nothing short of a wild, wild ride on the street across asset classes, across continents. Let's start with the big one, the S&P 500. The average daily swing on the S&P 500 over the last 4 sessions is 7.8%. I mean, that is absolutely a whiplash, and you can call it volatility, but really a whiplash. What about volatility itself? I'm talking about the CBOE Wix. If you take April 2nd as the starting day, which is the Liberation Day, the CBOE Wix from the 2nd to the 8th shot up 143% from low to high. To get to these kind of moves back in the past, you have to go to the dot-com bust, the Asian crisis, the GFC, or the Greek debt meltdown. Now to the bond market. Since Liberation Day on April 2nd, the 2-year yield is flat. The 10-year is up 26 basis points. Remember that Friday, the 10-year got to about 3.9%. The 30-year in this period is up 35 basis points. Basically, the long end is rising and is signaling higher risk premiums ahead. The dollar index itself, the dollar index has gone the other way. It slumped 4.5% since April 2nd, breaking below the critical 100 mark. I mean, the dollar is not behaving like it usually would in times of extreme stress, not like a safe haven. What about China? Now, China is central to this crisis, with Trump trying to correct perceived wrongs with respect to that country. Well, despite the 145% tariffs imposed by the US, the Shanghai Composite is down just 3% week on week. Do remember, though, that what is called the China National Team is out there in full force trying to stabilize markets. Let's take a look at a country like South Korea. Big exposure to the US market in terms of trade. Inside of the same week, the Korean stock index hit both limit down and then limit up. It's a historic first for that market, fear and FOMO back to back. Now, a few commodities, gold to begin with. Between the 2nd of April and 8th, gold dropped 5% high to low as everything was liquidated, but then bounced 7.6% to where it is now, and it's hit a new all-time high. Oil got crushed. It's lost 16% high to low in just 6 days. Another casualty, of course, of the macro mayhem. Overall, commodities have had it tough. I looked at the Bloomberg Commodity Index. It's fallen 9% in the same stretch, a broad-based signal of economic concern. So as we sort of head into the three-day weekend for some much-needed rest, I was thinking that maybe we need a name for this crisis. You know, we have the SVB, the Silicon Valley Bank, the GFC, the global financial crisis, the Greek debt crisis, pigs, Asian crisis, whatnot. So here is my suggestion. GTC, the global trade crisis. Back to you.
All right, the global trade crisis, GTC it is then. Prashant, many thanks for joining us. That's the story across the equity and commodity markets for the week. Now, equity mutual fund inflows fell by 14% in March. According to data released by the Association of Mutual Funds, net equity flows saw a dip of 40% from the peak of 42,000 crore rupees in October last year. Now, despite the sharp decline, SIP inflows have remained steady at nearly 26,000 crores. Gold ETF saw a net outflow of 77 crore rupees as investors booked profits after what has been a bumper rally. Prices of cryptocurrency surging, with the Bitcoin hovering near the $82,000 mark after President Trump reinforced his pro-crypto stance. Now, President Trump has signed a bill to overturn a rule from the Internal Revenue Service, that's the IRS, that classified decentralized cryptocurrency exchanges as brokers. The rule had aimed to crack down on crypto users who may be failing to pay their taxes, so relief there coming in for the crypto markets in the U.S. Jahangir Aziz, head of emerging market economics research at JP Morgan, expects a recession in the U.S. in the second half of the year due to the ongoing tariff war. He also warned that if U.S. and China trade comes to a halt, it would deliver a shock to the global trading system. Take a look.
So after the pause, we are still sticking with that, second half of the U.S. will go into recession. That's our base. That was a baseline prior to the pause. That remains a baseline. For global recession, we still don't have it in a baseline, but we have a 60% probability. We haven't changed that probability. US-China trade will virtually freeze. I mean, unless you critically need something, you are not going to participate in any transaction between US and China. Most of the trade that India does outside of US and China is also related to the supply chain that goes through US and China. So if the trade between US and China comes to a halt, this is a actual shock to the global trading system. So if global trade is under attack and global trade actually stumbles in the next 2, 3, 4 months before, let's say, we have a negotiated compromise, then I do not think that emerging markets growth gets spared.
Jahangir Aziz there of JP Morgan. IT giant TCS reporting its Q4 earnings yesterday. It did miss street estimates on both revenue, profit and margins. When asked about the impact of tariffs on the company, CEO K. Krithivasan said the company was seeing some minor delays in decision-making by clients, but no major project cancellations so far on account of the global uncertainty. Krithi added that customers are in a wait-and-watch mode, but there is no panic yet. Take a look.
Many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, whatever we are seeing so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we are not seeing any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction.
Well, that's TCS. Commerce Minister Piyush Goyal has said that while India has been talking to the US, UK and the European Union for standalone FTAs, that's free trade agreements, the country will not be rushed into an agreement. Speaking at an event today, Goyal said that India will not negotiate with a gun to its head. Abhimanyu joins us now with more details. Abhimanyu, where are things currently in all of these ongoing negotiations on these 3 FTAs? And, a lot of speculation on advancing the timeline and so on and so forth. What are you hearing?
As per the current estimates, India had exported total goods and services worth $820 billion in the previous financial year, which was a 6% year-on-year increase from the previous FY. India is intending to increase exports further this year. However, several challenges do remain with respect to imposition of tariffs and reciprocal tariffs, also uncertainty in global demand and geopolitical challenges which continue to persist. So India, of course, is exploring newer geographies. What the Commerce and Industry Minister had indicated that though a timeline is usually ascribed to sign FTAs, but an FTA cannot be signed forcibly to adhere to a timeline while forsaking national interests. So India continues to remain engaged in trade negotiations with several geographies, including the United States, with the EU, UK, and also several Latin American countries. India is also trying to increase the overall mix of its exports by including more processed goods, more agricultural goods, and more importantly is trying to hedge the risks emanating from a possible fall in demand in several developed economies by possibly looking at places in Latin America and Africa to increase its exports to in order to hedge the risks emanating from a fall in demand from several OECD countries.
हमने पहले भी कई बार कहा है कि हम बंदूक रख के कभी नेगोशिएट नहीं करते। समय की पाबंदियां अच्छी रहती हैं कि वो प्रोत्साहित करती हैं कि तेजी से बात हो, लेकिन जब तक देशहित और जनहित को हम सुरक्षित ना रख सके तब तक कभी भी जल्दबाजी करना अच्छा नहीं है।
That's the Commerce Minister. And staying with tariff, sources tell CNBC TV 18 that India is unlikely to offer unilateral tariff concessions to the US on automobiles. However, the government could lower tariffs on imports of cars worth 40 lakh rupees. And above Parikshit is standing by with more on the government's plan. Parikshit.
Well, India's tariffs on the automobile industry have taken center stage in trade negotiations with US, UK and EU. And for many nations, when it comes to auto tariffs, it's really a make or break situation when it comes to a deal. Sources say, despite the pressure from the US government, India is unlikely to offer any unilateral tariff concessions to the United States in the automobile sector, where the highest tariffs on import of fully built cars is around 100%. The Indian government's focus right now is to reach an early understanding on the bilateral trade deal with the US and get a reprieve from America's 25% tariff on the auto tariffs. But sources say the government is considering lowering tariffs substantially on imported cars, and there is a strong intent to do so as well. The government is considering lowering tariffs on import of premium cars from US, which cost above 40 lakhs with a fixed quota per annum. The government is right now exploring different scenarios to offer tariff concessions on imported cars, but the final decision is yet to be taken. Tesla's India entry would also be contingent on India-EU FTA, as cars would be imported from Berlin and not from the United States. And Tesla would wait and see the kind of tariff arrangement India and the EU reach as well. India would have to offer the same tariff cuts in the automobile sector to US, UK and the European Union, as all three have sought auto tariff cuts. Even response to India's scheme for manufacturing electric cars is likely to depend on tariff cuts offered to US, EU and the UK. While the scheme offers 15% concession import duty over the 100% currently imposed, companies have to commit to making in India with a $500 million investment. Guidelines for the scheme are yet to be issued, and all car makers would first like to see India's tariff cuts before applying for such a policy.
Well, Parikshit, many thanks for joining us. Now, former White House official Lisa Curtis believes the Trump administration paused the reciprocal tariffs because the strategy backfired. Curtis was part of the first Trump administration, and she spoke with Parikshit on the tariff blitz and the mood inside the White House. Listen it.
It hasn't made a lot of sense to people why he would do these broad tariffs on so many nations, including allies and partners. And I think it did backfire, and that's why he has stepped back and he's put on this 90-day moratorium. Elon Musk was very clear that he disagreed with this strategy, and he wanted to see the U.S. negotiating. And, you know, I think it's good that he came out and gave another perspective to this Peter Navarro pro-tariff perspective. So, you know, in that case, I think some of the infighting within the Trump administration played out in a way that helped the United States in the end, because it did, you know, finally lead President Trump to back off.
Lisa Curtis, who was a member of the White House administration under the first Trump innings. Tech giant Apple has airlifted 600 tons of 1.5 million iPhones from India in a bid to beat the new tariffs, according to a Reuters report. Apple shipped about 1.5 million iPhones in cargo weighing roughly 600 tons. The tech giant has been ramping up production in India, which was far which has far lower tariffs compared to China, but Apple continues to make most of its iPhones in China and has not announced any plans to scale back its plans. Amazon CEO Andy Jassy said that its third-party sellers will likely pass on the cost of increased tariffs to consumers. In an exclusive conversation with CNBC, Jassy also added that they have not seen a meaningful shift in consumer behavior yet. Take a look.
I'm guessing that that sellers will pass that cost on.
Fully.
Yeah, I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass the cost on. And you know, as I said, it's so early right now, but we haven't seen any change in consumer behavior in a meaningful way yet.
Andy Jassy there for Amazon, and as he's rightly pointing out, a bit premature at this point in time to talk about any particular trends on account of the tariffs. But up next, Hajmola candy under the GST Enforcement Agency's lens. So we'll tell you why when we return. The big macro data of the month, India's industrial output grew by 2.9% for the month of February. That's lower than the 5.2% growth in January. Manufacturing and the mining sector have seen a bigger slowdown compared to other sectors. So that's the latest there as far as IIP is concerned. Shifting focus to sovereign gold bonds, the government has covered almost 50% of the underlying liability for gold held under the scheme at the current market price. Sources tell us that the Gold Reserve Fund has sufficient balance to manage redemptions for the next 3 to 4 years. Sapna standing by to take us through the details. Sapna.
Absolutely. What we're getting to hear as a clarification from government sources is the fact that around for the next 4 to 5 years, the Gold Reserve Fund, carries or has sufficient monies to take care of any redemptions that will be coming through under the sovereign gold bonds. Having said that, the numbers that have been put out are absolutely bang on. Basically, 130 odd tons worth of gold is being held under the sovereign gold bonds, and sources are claiming that around 60 to 65 odd tons worth of sovereign gold bonds carrying that much of underlying gold, are up for redemptions over the next 4 to 5 years, and that is what the government has basically covered. They are fully covered is what sources are claiming. So that's one aspect. The second aspect, however, we need to keep in mind is that all of this is, of course, happening at the prevailing market price. So, sources are indicating this at what the current gold rate is. We really don't know where gold is going to settle over the next 4 to 5 odd years. And the way the rally has happened, that's something that we need to keep in mind. Last but not the least, look at the amount of funds that have actually gone up in the Gold Reserve Fund from the government side. So in FY24 actuals, it was just around 3,500 odd crores. That number in the last financial year has jumped to 28,000 crores. So that basically indicates that sovereign gold bond story is not as simple as it appears to be. There is a lot of money that the government has kept aside for the same. Since these are sovereign bonds, there cannot be any question of any kind of a default. As of now, as per sources, they are covered for next 4 to 5 years worth of redemptions, but we'll have to keep a watch on how that prevailing market price of gold behaves.
All right, many thanks. On to CNBC TV's in exclusive. Hajmola candy is under the GST Enforcement Agency's lens. Now, here's why. Sources say that the DGGI is investigating whether Dabur's Hajmola candy should be classified as an Ayurvedic medicine, which is taxed at 12%, or as a candy that would attract a higher GST rate of 18%. Timsy standing by with more. Timsy, medicine or candy?
Well, Dabur India and DGGI are at loggerheads. What we are given to understand from sources is that Dabur's Hajmola candy is currently under DGGI scanner. The Directorate General of GST Intelligence is investigating the classification of Hajmola candy under the GST regime. To be precise, DGGI's Coimbatore zone is currently investigating whether Hajmola candy should be treated as an Ayurvedic medicine, attracting 12% GST, or as a candy under 18% GST. Dabur, during the investigations, claims to DGGI that Hajmola candy is an Ayurvedic medicine and not a regular sugar-boiled candy. Meanwhile, email queries sent to Dabur India remains unanswered, and Dabur, also important to note here that Dabur in the pre-GST regime faced a similar challenge through Supreme Court, and it had got clarity in the favor of the company, stating that Hajmola candy is an Ayurvedic medicine. Also important here that Dabur is already facing a tax demand. Dabur on 1st of April disclosed that it has received an income tax reassessment order demanding 110.33 crores for financial year 17-18. The Income Tax Authority alleges that Dabur made incorrect claims for tax deduction related to in-house research and development under Section 14A of the Income Tax Act. Meanwhile, Dabur said that it plans to challenge the demand. So let's see what happens finally, whether government actually goes back to the council to change the classification of Hajmola candy, or the previous Supreme Court ruling comes in the favor of Dabur when it comes to this particular DGGI case, something that we'll have to wait and watch for.
All right, Simzi, many thanks for joining us. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment with more.